Welcome to this video. In this video, I'm going to be making a stock analysis of RTX Corporation. So if you like this video, please don't forget to leave a like and subscribe. Also remember, this isn't financial advice, this is purely for entertainment and educational purposes. Now, what does RTX Corporation do? Well, as you can see down here, the earnings, what they earn money on. Let me just remove this. As you can see, it's Collins Aerospace, it's Pratt & Whitney, it's Raytheon and Missile Defense, and all that sort of stuff. And it's quite nice. As you can see, the thing they make the most money on is Collins Aerospace and Pratt & Whitney and then Raytheon. So it's quite nice. They make a lot of missile systems and defense systems as well. And Pratt & Whitney, there are engines for both missiles and jet planes as well. Of course, they have their Collins Aerospace divisions as well, so that is quite nice. And I like it quite a lot at the moment because I think the next niche that is going to really blow up is going to be of course, the missile. Of course, also think that we're going to see some autonomous missiles in the future, and not drones, but autonomous missiles. That is missiles that can more easily target and dodge other things. And we are currently seeing some development in that as well from RTX. Now, also just aerospace, I do think is going to be the next thing that is going to really blow up. If we look at the beta of this stock, as you can see currently, the beta of this year is 0.73%, which means if the S&P 500, where this is in, moves 1%, well, this is going to move 0.73%. So, of course, it's quite nice and slow. And as you can see, it's had quite a decent slow rise ever since October in 23. It has been up quite nicely. Of course, we do see some downturns as well, but overall, it is quite nice. As you can see, they also pay out dividends. As you can see, all these blue E's, they pay out dividends as well. They pay out 1.85%, which is decent. As you can see, and they pay about 4 times a year. And we like this a lot because this means we can get our dividends snowball rolling a lot faster. That's quite nice to see. Now the annual earnings is just increasing more and more and more, as you can see here as well. Which is of course lovely to see, and I do think we're gonna see it increase much more now that there is one Ukraine, and I just think a lot of more people are gonna, or not people, countries are gonna invest a lot more in especially missile and defense systems. So of course I do think that is gonna be great for the RTX itself. Well, the seasonals on this stock since 2010, let's just look at that. As you can see, some years we have quite poor performance, as you can see, but overall it's not the worst performance. We do see, of course, in 2020 where it crashed, but that was of course due to the pandemic. Overall, the worst years we've had since 2000 and 2010. Of course, it's really not that bad. The worst one is almost 200% down. Then overall, we have many great years, and of course, you will think, well, they're not up at 90, 80%. We don't care about that, to be honest. We want the compounding effect of a stock like this. When a lot of years in a row with nice and steady increases, which of course love to see, and we have that quite nicely here. And because it rises slowly, which means there's also less chance that it's going to be in a bubble and fall through the roof, or through the floor, I mean, at some point, which of course is great. Now currently we are also up in, as you can see, the RSI right here, which is quite nice. We did have a bit of a dip recently here, but overall we have been up here in the RSI for quite a while, which of course is nice. And up here means we are in the upwards trending channel. As you can see, it's below 70 and 50. When we are up here, it means the stock is increasing upwards, and when we're down here, the stock is falling. As you can see, once we have these huge pitfalls here, that is where it's oversold. As you can see, we have some quite volatile periods recently, but overall it is still increasing nicely, which we like to see. Now the technicals for this for the day is a strong buy, and for the month it is still a strong buy, which shouldn't surprise you. As you can see, this past month, let's just take all the way from this peak down here, or this bottom down here, it has increased quite a lot, almost 40 bucks, 30 bucks. Of course, it is nice to see, and we also have this golden cross here, so of course it is a strong buy for the month. And now the analyst rating on this are actually quite impressively bad. I personally think we only have 15 strong buy, or buy an 8 hold. But why do I think this is bad? Well, I just think this company is going to surprise quite a lot. So I do think it should be, I think it should have more strong buys and less holds. Or I just think that the average stock price should increase more. As you can see, the average says it shouldn't move basically the rest of the year, which I do think is a lie. I do think it's going to sit just above this 160. So currently my best guess is it's going to sit beyond the max. I think it's going to be ending 167, 168 probably. I do think it's going to be quite nice. So about 18 and 19% up from where we are. And as you can see down here in the EPS as well, it's just increasing nicely over the years, which we love to see. And as well down here in the revenue, as you can see, also steadily but surely increasing more and more. We like to see, and as you can see, these two past year, of course, we also had surprise in the revenue. And these past 4 years, we've had surprise in the earnings per share, which of course love to see as well. Overall, just a great company. That was my stock analysis of RTX Corporation. If you like this video, as I said, please like and subscribe. And if you want to see any other videos or any other companies, please leave them in the comment section below.